Maybe before we talk about the market, let's talk a bit about the MPC decision that we're expecting next week. And of course, the inflation numbers, which should be out on Monday. What are your general expectations? First of all, let's start with the inflation numbers.
Thank you very much, Wole. I think the figures that was released from the calendar from the Nigerian National Bureau of Statistics says that they're going to release the inflation figure on Monday, 19th of March, for the month of February. We think that that figure should moderate marginally to about 12.4 from 12.6 in the month of January. We expect stability arising after the initial sharp on account general prices on account of the increase in fuel price, removal of subsidy in the month of January. Right. But we think now it's going to moderate. The composite price index will still increase marginally with 131 points. But in terms of the inflation numbers, on account of base effect, we think it's going to moderate downward to 12.4.
And what will that mean for the MPC?
We do not think that MPC will look at that actually to decide the policy reactions. You know, we have mentioned it on this program before that their decisions is going to be based on what their expectations of what will happen in future. We think now that what the MPC should be looking at is actually the dynamics around the oil prices, around the external reserves. We got a figure from the Central Bank on their website. If you look at the oil prices in the last couple of months, it's been going up on account of tension on sanction in the Middle East, especially in Iran. But then we have not really seen that impact reflected so much on external reserve. Yeah, it's been increasing marginally, about 5% year to date, while oil price has grown over 20%, in addition to the improved production. What I think they should look at actually is to ensure stability in the foreign exchange market.
So what does that mean for you? A rate hike or?
No, not really a rate hike, but to ensure that there is no justification actually at this particular time for them to increase rate. I think what they will do is to reduce rate. But however,
you think they'll reduce it on this meeting?
Maintain rates at this meeting. We have mentioned that toward the middle of the second quarter, they may likely reduce it to about 11.5. But in terms of external reserves, we think they should have to watch it closely so that it doesn't fall below the 3 months of import cover that is required for a country like Nigeria. It's about five months of import cover now, but they need to watch it very well.
Okay, very quickly, let's go through your best stock market ideas right now. I know you like some of the banks, but give us your thoughts on which one is the most attractive play right now, given how the market has trended recently.
For me, I think, given at the current prices, Bank and GTB appears to be excellent buy.
GTB should release numbers very soon.
Yes, we expect them to release about a dividend of about 80 kobo, in addition to the, excluding the dividend, interim dividend that they gave earlier. Yeah. We should give about €1. Dividend yield on that one is in excess of 5%, which is excellent. We think that Bank will likely give a dividend of over 69 kobo. That's our forecast for them, given the current price in excess of 6% dividend yield. These are excellent buy, and they will be given the fact that there are rooms for capital appreciation. I think it's good at this particular price. Going into the food and beverages, we think Cadbury at the particular price is an excellent buy, but we are not expecting Cadbury to pay dividend for the account in 2000 for the account that will be released now. But going forward in 2012, we expect them to pay dividend, remember about 40 kobo, 50 kobo going forward. So these are our top picks at the
You mentioned Cadbury. It's not a stock that I've heard many people really promote recently. What do you like about Cadbury?
Now, there has been some restructuring. Of course, about 2 years ago, or maybe 3 years ago, the right issue to inject additional capital into it to ensure that they move from where they were coming from, the problem they had earlier, in terms of the overstatement of account. Sometimes last year, the largest food producer in the world, Kraft, bought into acquire Cadbury International, but then which automatically becomes that Nigerian becomes a subsidiary of that company. Now the strategic expansion they've been having in the last couple of years, they have trimmed down their products to ensure that they produce what they have competitive advantage on. There's going to be a kind of a synergy with a company that is producing cocoa, Starmark, in Ondo State, Nigeria, with a mind to ensure that they produce the raw material for all the operations, and in fact to export it to Ghana and South Africa and across West Africa.
Right,
but
so
I think
it's
it's
a company
a good
rebounding from
from
very tough times.
level,
But
yes.
very quickly, what kind of growth rates are you anticipating?
We expect them growth into 2012. We think top line should grow in the region of about 30%, while the bottom line should grow about 25%, which will give an excellent buy for them.
Let's leave it there. Thank you so much for your thoughts. Ayodele Akinwunmi, Head of Research at FSDH, giving us his thoughts on the market and his best ideas right now.